economic storm is coming. Minsheng Bank cuts Beijing staff salaries by up to 50%. China banking crisis? Deposit 100,000 yuan, but only allowed to withdraw 3,000 from a Guangdong bank. The mainland's youth unemployment rate rose to 18.8% in August, reaching a new high this year, with actual figures believed to differ significantly. Does the fiscal crisis threaten the regime? The Central Commission for Discipline Inspection calls for asset revitalization. As the Communist Party of China calls for living a tight life, two sources familiar with the matter told Reuters that employees at the Beijing branch of China Minsheng Bank have faced salary cuts of up to 50%. As part of broader cost-cutting measures, Minsheng Bank has also stopped paying certain work-related expenses and other benefits at its Beijing branch, which is the bank's largest branch, employing over 4,000 people. The two sources, who requested anonymity, said these measures have been fully implemented at the Beijing branch, but it remains unclear if similar measures will be applied to other branches. These salary cuts, up to 50%, are the largest among China's major commercial banks in recent years. Minsheng Bank and China's banking regulator, the National Financial Regulatory Authority, NFRA, have not yet responded to Reuters' request for comment. Living a tight life. According to the BBC, the Communist Party of China promoted the slogan, "Living a Tight Life," in 2023 in response to fiscal revenue shortages as China's economy slows and shows weak recovery. Governments across China have issued regulations to align with Beijing's call, with civil servants bearing the brunt as salary cuts began last year. Financial institutions, both state-owned and private, have followed suit, implementing measures such as cutting salaries and bonuses and encouraging employees to avoid wearing expensive clothing to work. China Construction Bank, CCB, the country's third-largest commercial bank by assets, asked its head office staff to reduce their salaries by at least 10%, Reuters reported in July. Reuters also reported earlier this month that China Merchants Fund Management, one of the top 10 fund managers, asked senior executives to return compensation that exceeded a new cap imposed over the past 5 years. Minsheng Bank's salary cuts reflect concerns over profitability. Chinese lenders are under pressure to reduce loan costs as the economy grapples with a prolonged real estate crisis and teeters on the edge of deflation. Official data shows that Chinese banks' net interest margin fell to 1.54% at the end of June, a record low. Minsheng Bank, a second-tier joint stock bank, had total assets of 7.7 trillion yuan, $1.1 trillion, at the end of last year, ranking 11th among China's approximately 4,600 banks. Founded in 1996 as China's first privately controlled commercial bank, Minsheng Bank has been severely affected by the ongoing real estate crisis. The bank is a major creditor of China Evergrande Group, which is at the heart of the country's real estate crisis. Minsheng Bank has also been impacted by the financial troubles of one of its largest shareholders, developer China Oceanwide Holdings Group Co. Ltd. Minsheng Bank's net profit fell 5.5% year-on-year in the first half of this year, while the non-performing loan ratio for its real estate loans rose to 5.29%, up from 4.92% in 2023. China banking crisis. Deposit 100,000 yuan, but only allowed to withdraw 3,000 from a Guangdong bank. On the evening of September 28th, the news that a deposit of 100,000 yuan in a bank can only withdraw 3,000 yuan, about 420 USD, was on the hot search list, sparking heated discussions. On the 27th, a netizen posted a video revealing that when he withdrew money from the Yuanzhou branch of the Bank of China in Boluo, Huizhou City, Guangdong Province, he had deposited 100,000 yuan but could only withdraw 3,000 yuan. On the 28th, the person involved told Jimu News that he later provided a third-party certificate before he was able to withdraw the money. The person involved said that when he was withdrawing money, the staff asked him where the money came from. He said that it was a friend who had urgently transferred the money to him. The friend who transferred the money was also present at the time, so he showed the transfer record and a photo of his friend's ID card. However, the staff said they needed to see the friend's original ID card. His friend had to go home to retrieve the ID card for the staff to check before they finally allowed the withdrawal. The person involved said that, fortunately, his friend lived nearby. But what if his friend had lived hundreds of kilometers away? What would have been the point of withdrawing the life-saving money he urgently needed? In response, the Bank of China's customer service said that the branch's actions may have been taken to prevent fraud. This incident triggered heated discussions among mainland netizens. Please change Huizhou to include the whole of China. Yes, my agricultural bank card has a daily limit of 1,000 yuan. Same as Shenzhen, you can only withdraw 2,000 yuan with a salary of 6,000 yuan. Just to prevent fraud, this method is adopted. Or for what purpose, it's hard to say. Only they know. Unreasonable regulations should be abolished. Serving the people is not managing the people. Why should banks restrict users' withdrawals? Should banks serve depositors or relevant departments? Why should we understand? This is an infringement of the legitimate rights and interests of customers. If you encounter this situation, go directly to the China Banking Regulatory Commission to complain. This is a one-size-fits-all approach of inaction, which is very distinctive. Under the pretext of preventing fraud, it is actually a malicious restriction. It's bullying depositors' freedom to deposit and withdraw money. Limiting personal transfer and withdrawal limits really brings a lot of inconvenience, but it doesn't prevent scammers from transferring assets at all. I don't understand. My wife transferred money to me, and when I went to withdraw cash, I had to provide my marriage certificate and my wife's ID number. I borrowed money from a friend, and when I went to withdraw it, the bank asked me to provide the other party's ID number and phone number. I also had to call to verify. It's really troublesome, and the transaction time gets longer, while the people waiting behind me keep cursing. I found something very strange. Ordinary people's normal transfers and withdrawals are limited, but it is very easy for scammers to transfer money. It was originally a number that was deposited, but in fact, the money was misappropriated. The money was misappropriated and the deficit was lost. The economy is finished, and the bank has no money. The mainland's youth unemployment rate rose to 18.8% in August, reaching a new high this year, with actual figures believed to differ significantly. On Friday, the National Bureau of Statistics of the Communist Party of China released the unemployment data for August. The national urban unemployment rate for people aged 16 to 24, excluding students, was 18.8%, marking a new high for the year. The overall national urban survey unemployment rate, regardless of age, stood at 5.3%, also the highest this year. From April to June last year, the youth unemployment rate exceeded 20% continuously, peaking at 21.3%. Following this, the authorities announced they would no longer release age-based urban unemployment rates. Starting in January of this year, the statistical method was adjusted to exclude students before the age-based unemployment rate data was resumed. However, given that the Communist Party of China has a history of manipulating data, and with the mainland's economy in decline, outside analyses suggest that the actual unemployment rate may be higher. Many experts believe the figures released by the CCP are unreliable and often falsified to downplay the severity of the situation. Several analysts, based on independent survey data, estimate that the actual youth unemployment rate in China could be as high as 50 to 60%. Moreover, the number of unemployed people across all age groups is rising rapidly, signaling that the Chinese economy is facing an unprecedented recession. Does the fiscal crisis threaten the regime? The Central Commission for Discipline Inspection calls for asset revitalization. As various regions in China are selling off assets to address debt risks, the Central Commission for Discipline Inspection, CCDI, has called on discipline inspection and supervisory agencies to step in, closely monitor the management of state-owned assets, and revitalize idle ones. Experts believe that this move may involve corruption and extortion, potentially triggering greater public resentment. The CCDI's directive serves as a warning in this context. On September 18th, the CCDI and the National Supervisory Commission published an article stressing the importance of revitalizing idle state-owned assets, claiming that doing so would significantly reduce government and corporate debt risks. The article urged discipline inspection and supervisory agencies to monitor the implementation of state-owned asset management, identify existing assets, revitalize idle ones, and improve governance of state-owned assets to promote asset preservation and appreciation. David J. Wong, a U.S.-based economist, commented, "The CCDI's article primarily addresses the loss of state-owned assets. With the economy in a downturn and state-owned enterprises under heavy debt pressure, the hope is to better manage and utilize these assets to repay debts and increase state revenue." Analysts note that this task should typically fall under the State-Owned Assets Supervision and Administration Commission, SASAC. The involvement of the CCDI suggests that the financial crisis may be serious enough to pose a threat to the regime. David Huang noted, "In the past decade, China has seen state-owned enterprises expand while private enterprises retreat. With this growth has come a variety of issues related to asset management and operational inefficiencies." Epoch Times columnist Wang He added, "Corruption is rampant within the CCP. The CCDI knows that revitalizing state-owned assets provides opportunities for corrupt practices, such as embezzlement and profiteering, which is why they issued this warning." Some analysts interpret the CCDI's call as a directive for local governments to sell assets, mortgage assets, and raise funds wherever possible. On August 28th, the Bishan District Government of Chongqing issued a notice announcing the formation of a sell-off team to coordinate the sale and revitalization of state-owned assets in the district. Local Finance Bureau officials confirmed that the team has begun operations. Xi'an, a professor at the University of South Carolina's Aiken School of Business, commented, "This highlights the severity of local governments' financial problems. As the Chinese economy sharply declines, local governments are resorting to selling assets to fill fiscal gaps. However, the market may not be interested in the assets the government is willing to sell, so this approach may not be successful. Experts believe that even selling off assets will not resolve local debt problems. Shanghai's glamour is gone, businessmen are leaving, and the economy is in free fall." This year, various economic data from China indicate that the mainland economy is in a serious recession. Recently, the leader of the Chinese Communist Party personally visited Shanghai, China's largest financial center, during a tour of the South, which underscored the severity of the crisis. During Xi Jinping's inspection tour of Shanghai, foreign media reported that the China International Capital Corporation, CICC, strictly prohibited analysts from criticizing the Chinese economy, raising doubts about whether Xi had a realistic understanding of the current economic situation in Shanghai and China as a whole. Lao Man, a famous financial analyst from China Finance, published an article titled, "How Disastrous is Shanghai's Economy?" which has once again been widely circulated on the internet. The article analyzed the current state of the Chinese economy and argued that Shanghai's economy was stagnant. Shanghai netizens commented, "Shanghai's current situation is heartbreaking and helpless. The real economy is struggling. Large companies are laying off employees, factories are reducing overtime, and more people are working part-time as delivery men or Didi drivers." Another netizen added, "All sectors are cutting salaries and laying off employees. Few are expanding. Even some large-scale recruitments or hiring quotas have been canceled." At the end of last year, the article, "How Bad is Shanghai's Economy?" published by Lao Man, was once again widely circulated online, pointing out that Shanghai's economy has become stagnant. Immediately after that, the leader of the Communist Party of China rushed to Shanghai for inspection, highlighting that Shanghai's economy is indeed on the verge of collapse. Xi'an, a professor at the Aiken School of Business at the University of South Carolina, said, "The Yangtze River Delta and the Pearl River Delta have always been the engines driving China's economy. Particularly, Shanghai is China's financial center and the primary hub for opening up to the outside world. If Shanghai, which has the best economy and conditions, is in such a state, the situation in China as a whole is worrying." Economist and political commentator Li Hengqing stated, "The most important engine of economic development is finally stalling. If Shanghai's economy, which significantly drives China's overall economy, is stalling, this reflects the dire state of China's economic development." Recently, many Shanghainese have said that Shanghai's former prosperity is gradually fading, leading to consumption downgrades across the country. A Shanghai netizen remarked, "Now everyone's consumption has been downgraded, but more and more people around me are saving money. Why? Because everyone senses risk. When money is easy to make, you can spend it freely, knowing you can earn more. But now it's really hard to make money, and our situation has not improved." Xi'an commented, "Xi Jinping visited Shanghai, hoping for a revitalization, but now it seems that he may have no way to restart Shanghai's economy." He further noted, "China's economy has essentially regressed 20 years, returning to the pre-WTO situation in 2001. Experts pointed out that China's severe economic recession stems from the CCP's party-controlled economy, which has now formed a vicious cycle and is difficult to reverse. Li Hengqing said, "Xi has been emphasizing that the party leads everything, and he has no intention of making large-scale adjustments. If he were to do so, it would mean relying on the market economy and the rule of law, which would establish a civil society, something that the Communist Party cannot tolerate. Therefore, the chances of China's economy or Shanghai's economy reviving are diminishing, leading to a situation that is difficult to reverse. In the days ahead, all resources in the financial sector will be prioritized to extend the life of local debts, which will inevitably mean that the financial industry will lose liquidity and die as a whole. At the same time, foreign financial institutions will leave China without hesitation. For Shanghai's economy, this is unbearable. For provinces in the central and western regions that are highly dependent on Shanghai's fiscal transfer payments, this will undoubtedly be a significant blow, making it more difficult for them to borrow money. This is a tragic, vicious cycle. Hard times are coming. Chongqing sets up a smash pots and sell irons special team, public opinion in an uproar. On August 28th, the Chongqing local government announced the establishment of a Smash Pots and Sell Irons working group, which has attracted widespread public attention. Netizens have been discussing whose pots are being smashed, whose irons are being sold. Some people analyze that the finances must be running out of money and wages may not be paid. The official formation of a Smash Pots and Sell Irons special team indicates that hard times are truly coming. According to the document, this Smash Pots and Sell Irons working group consists of special personnel drawn from multiple government departments. The official website of the Beijing government confirms that the 3 individuals mentioned are indeed district officials, and the notice shows that the special team was established after research by the district government, in accordance with the relevant requirements of the Work Plan for Promoting the Activation of State-Owned Assets in Beijing District, Chongqing. This seems to confirm that the document is not baseless. As for the specific responsibilities of the Smashing Pots and Selling Irons working group, the document states that it is responsible for the overall planning of smashing pots and selling irons work across the entire district, including formulating work plans, clarifying the scope of implementation, determining asset packages, establishing price determination mechanisms, improving reward and punishment measures, promoting project implementation, carrying out policy publicity, and other related tasks. As soon as the news broke, public opinion was immediately in an uproar. On social platforms in mainland China, netizens discussed, whose pot is being smashed? Whose iron is being sold? Does the country really need to smash pots and sell iron? Do you still want to develop the Western region? The Yangtze River Delta and the Pearl River Delta must be stabilized first. Some people also commented, it's another campaign slogan like this, which is really scary. It probably means that the finances are out of money and wages can't be paid. Others are worried that the official establishment of such an institution could mean that a large number of state-owned assets may once again be sold at low prices. Since the founding of the Communist Party of China, it has used different slogans at different times. During Mao Zedong's era, it advocated advancing into communism, but during Deng Xiaoping's time, it was acknowledged that China was only in the primary stage of socialism and had to cross the river by feeling the stones. Now the authorities have announced that they will smash pots and sell iron, prompting some netizens to mock the Communist Party for being worse than previous generations, saying, after a major change unseen in a century, it has finally returned to the level of the Cultural Revolution. There has been no progress, only thicker skin.